we had the first conference in this very room, and it's been 6 months that we have this new board in place. So before I make the introductions, also wanted to thank all of you for your kind support in this last 6 months during the new board that took over. And let me introduce you to Mr. Uday Kotak, who will now sort of take it off from here. And we will have a small presentation after the introduction, followed by a Q&A. And we will request you to restrict your questions to only IL&FS. Thank you.
Good evening, friends, and it takes me back to October 4, which is when we had the first meet, which is about 6 months ago. We got appointed on October 3, as you are aware, and if I may refresh you. And therefore, exactly 6 months later, we are here again to share with you the developments concerning IL&FS. And the purpose of doing it today was that we had a full day board meeting, and post the board meeting, considering that it is half year, we felt it was necessary to update the broader public to you about the developments and, in a way, a status report card of where we stand. And considering that there is a significant amount of interest and also responsibility for us as being significant, having significant responsibility for what is probably amongst the largest challenges to public funds, we felt it was important to come and share with you today. But before I go there, I wanted to take this opportunity to introduce my colleagues around, and also some specific developments in that context. So on my left is Mr. Vineet Nair. Vineet, as you know, on October 4 was appointed as Executive Vice Chairman and Managing Director. And I'm happy to report to you that effective today at today's board meeting, Vineet is now Executive Vice Chairman of the company. And my colleague on my right, Mr. Rajan, who was on the board for the first 6 months in his capacity as non-executive director, effective today has been appointed as Managing Director of IL&FS. So Rajan here with me. On Mr. Rajan's right is Mr. Vijay Kumar, who was appointed a few months ago as Deputy Managing Director. And it is heartening for me to now see that over the last few months, we have now actually got a solid management team which is being put in place to manage the whole resolution process and the framework in the context of IL&FS. I'm also happy to report back to you that in addition to the full-time board members, which are three, which is Mr. Vineet Nair as Executive Vice Chairman, Mr. Rajan as Managing Director, and Mr. Vijay Kumar as Deputy Managing Director. I have also the opportunity to introduce to you what we have created internally as the operating committee at IL&FS, which looks after the entire group. Therefore, the other members which you see here are the members of the operating committee. These colleagues have been actually running the operating management of IL&FS under the whole-time board members and, of course, under the guidance of the overall board. Therefore, on Vineet's left is Mr. Shivraman. Mr. Shivraman is the Chief Operating Officer and who joined IL&FS in the month of December. And is now responsible for the overall operational functions as well as the significant resolution process which we are running at this point of time. On Shivraman's left is Mr. Kaushik Modak. Kaushik is the CEO of IL&FS Financial Services, which has been quite a bit in the news. So I'm sure there is a lot which Kaushik may have to, or Kaushik's business may have to share. So I'm sure that Kaushik will be able to throw some light on some of the issues which are concerning IL&FS Financial Services. On Kaushik's left is Ashwini. Ashwini is responsible for the entire energy vertical as the CEO of the energy vertical, which includes power, both thermal, wind, solar, and also takes broader responsibility for a whole host of things in the operating committee. And on my extreme right is Mr. Dilip Bhatia. He is Mr. Roads and Transportation, and therefore is responsible for a very large part of the IL&FS portfolio in roads and transportation. So one of the purposes of today was to present to you the significant progress we have made in creation of a management team from the board now into the whole IL&FS situation. And as you know, I continue to be the non-executive chair. And as the management takes more and more charge of this, we will be able to report to you more frequently from management to you as media. And with that, we have now got a small presentation on in a way, it's a report card of the last 6 months of what has happened in terms of progress at IL&FS. And I will have my colleague, Mr. Shivraman, to take you through that, and we can do Q&A after you've gone through the full presentation. We will also be giving you a copy of the presentation at the end of this. So with that, over to you, Shivraman, and we will go here so that you can see.
Good evening to all of you. Thanks for being here. It gives us an opportunity to really kind of give you an update on what has happened in the last 6 months. I think the objective of this the objective is not just to update progress, but also to make sure that we are able to explain to you the complexity that the new board was faced with. That's important to understand. It's not a situation where we can just get down and start a resolution. It's not easy. We need to first understand where we are and what we need to do before we actually start action. So that's what we will try to do. I hope this slide gives me a time to warm up and communicate more comfortably with all of you. This is not something that you did not know before this, right? Just to give a background is that the S12 board of IL&FS got superseded by the government order. Under NCLAT order, a new set of board members have joined us. So they have been in position for the last 6 months. I think the good amount of time has also gone into understanding what is IL&FS as an organization. I think it's a great realization when somebody gets to see it in detail, in the near term, what does it really mean. The second is then to really put together an action plan. How do we really go about finding a resolution for all that is available? These numbers are also, you must have been familiar, but why am I saying this here is to just context what are the challenges as we look at this resolution process. It's a fairly large number as debt. We are talking about an obligation that this group has created to the external world of about 100,000 crores, 1 lakh crore roughly, right? We need to include the guarantees as well as part of the overall exposure that the financial institution, financial lenders have got to the system. To this IL&FS system is important to understand, because given where we are today, our inability to execute or complete the project, a good portion of this could end up being encashed, and so we need to consider it as an obligation as we work towards a resolution. The number just gives you the secured, unsecured levels. The key point is that out of these 1 lakh crore, roughly around 45,000 crores are sitting in entities: IL&FS, ITNL, IEDCL, which is the energy holding company, and also IL&FS Financial Services. These are the 4 key holding companies which we have described here. They have a total exposure to the market of about 45,000 crores. These entities do not have a regular income except IFIN, which is basically a lending entity, so it can get repayment of principal and also the interest on that. But then they need to have a real operating cash flow. They don't have any real operating cash flow on an ongoing basis to take care of these debts. Okay? That's a piece that one needs to really get to understand. The next point, if I want to highlight, is that there are creditors, as we saw, secured, unsecured, but more importantly, they are distributed at multiple levels within the group. So when we look at resolution, it is something that we need to apply our mind as to how do we deal with creditors at each levels. Again, whether they are operational creditors, secured creditors, unsecured creditors. So that's the way we need to really look at. So it's not that, I think all classes of potential creditors are sitting over here, be it banks, PSU banks, private banks, NCD holders, PFs, who have seen infrastructure as a safe bet to invest in. We have mutual funds who have invested in. We have foreign banks who have invested in. We have also external commercial borrowing sitting and supporting the overall balance sheet of this company. It's a fairly large variety of creditors who have got a different maturity profile when they invest in this entity, creditors whose understanding of the credit profile of a particular entity varies depending, or the sophistication levels vary. So I think we need to kind of make sure that we have a reasonable approach to resolving this credit in a manner that they feel that it is justifiable. Okay, that's very important. If you don't find this resolution as a fair resolution in the context of each one of them, then we are going to have a significant level of challenge as we go forward. We have all seen the way IBC process have worked in the country, right? If one sees that how many cases have been resolved, how many cases are being continuously litigated after reaching a level of resolution also, then you can assume that the challenge that we really are faced with. And given that some of these creditors are secured or unsecured, as the case may be, they may be secured because most of the security that are given here are the investments made in the various special purpose vehicles, the operating projects. Now, these are secured only if these operating projects are valuable. Otherwise, the security doesn't look to be, it's not really meaningful. Okay, so these are things that we need to really factor in as we work towards our resolution. If one sees the IL&FS balance sheet on a standalone basis, the balance sheet looks quite strong, right? But if you really look at the aggregate of the consolidated debt-equity ratio of this entity, we are talking about 10:1. Here is an entity which has been investing in long gestation and what I will say the long-term infrastructure projects, or these are projects which gives cash flows over 15 years, 20 years, 30 years kind of timelines, right? And how do you support that kind of an investment with a 10:1 debt-equity ratio, which is very challenging? I also come from a fairly strong infrastructure company of this country. Right? So I understand the challenges that you have in terms of making an investment of this type. The second point is that most of the project cost overruns, virtually all the projects have had a cost overrun of varying degrees, but all this have been funded out of external credit, right? And even what you see as the net worth is also because some of the income have been accelerated or there have been advisory fees which are charged on various SPVs for development and arranging money, which may not have got paid fully, or they have been funded out of debt at the operating entity level. So, which means that at the aggregate level, the effective net worth is reasonably lower than what we are seeing here today. So, these restrict your ability to find a resolution within the organization, because you are not able to raise additional capital. The underlying projects have got limited value possibility. So your ability to raise any kind of, do a resolution by raising fresh equity or even rearranging the debt or anything will be difficult. Asset liability mismatch is another very, very important point. As we described, these assets generate cash over a period of 15-20 years, right? And as I've seen, some of the significant level of cash flow actually come in one of the verticals, road verticals, come up to about 7 years. And whereas the average maturity of the loans and the ITNL, which is the holdco, which is invested, or IL&FS, is between 3 to 5 years. So you really have a situation where unless you are able to continuously create value at the SPV, create a creditworthiness in the minds of the creditors of this, your ability to raise fresh capital, fresh debt to sustain the level of current debt is going to be very suspect. So that's one of the biggest problem with this. So they have always, it has always been met out of, solvency requirements have been met out of fresh debt with the support of a high quality rating. Okay, that's been one of the things that was really did not exist the day there was one default and you already lost everything on that account. The recoverability of the loans given either by IFIN to the within the group or to third parties are also something which is posing a challenge, right? Both in terms of the timeliness within which we can realize this money to be able to service the creditors, or the amount of money that we can really get back from these creditors are also posing a challenge to us. The fear that we have is that the clients who IFIN has lent to are quite weak in terms of their creditworthiness, so which could have an impact on how we recover, what time within we recover, how do we enter into a one-time settlement with them. These are also posing a challenge to us. The past was the absence of central control function. We are attempting to create a semblance of central control with the kind of management team that is in here. Hopefully that will work better and make sure that there is an integrated organization available to us to work on the resolution. If financial leverage was just one complexity, again we are in multiple verticals. It is 10 at the least count. It can be more depending on, if you really look at, analyze each one of those small entities which are there. The others could have quite a few verticals which can add. Now, when the board taken charge, okay, it's one of the key things that needs to do is to do a status review, get an understanding of what these assets are, what the business, what are the value dynamics, or what are the risks involved in this before we can even launch a process for resolution, right? So you must, why I'm saying this is to appreciate that the 6 months have not gone doing nothing, because we may not have seen much of an outcome on the ground in terms of announcements. But key thing is that it's important that we do a resolution which is meaningful, which adds value to the stakeholders. You will see the stakeholders are very limited. They are not shareholders clearly here. Okay. And in terms of number of entities, right? We started with 347. About 45 of them have got closed, or otherwise they've reached a closure in their own right. We still left with 302 entities, right? Out of these 302, 133 are foreign entities, which are basically largely subsidiaries of the transportation vertical, right? We are really not focusing on them at the moment, because one, our assessment is that the value realization potential is quite low, and there are external, rather foreign laws which will take care of the settlement of these. So we are not going to focus and spend time on this. I think it's more important that we take care of the creditors by resolving the assets which are located in India. So we still have about 169 odd entities which are being resolved. A good number of them, as you will see later on, has been part of the sale process. Many of them are being wound down or otherwise liquidated. The assessment is happening. I should say that it's not easy to quickly decide that so many companies can be let's close down, because there are either receivables, it can be even tax receivable because some of the income might have been accounted through those entities. We have liabilities to be paid off to the third-party creditors. So it's not simple and then say that, okay, let's close down this entity. So these processes will have to be done parallelly, okay, as we also attempt to resolve. So I'm also saying that there is a level of distraction which is significant to be attended, or we having to attend to all these priorities as well. (302) companies held under three levels of holding companies. Okay. In a normal operating global entity, it's a structure that exists, right? But when you get into a problem and the complexity of resolution, you are faced with intra-group transactions, liabilities, right? And also the governance, the board at each level, each one of them will have to be taken care to really find a resolution process. Okay, so it's not a simple one product company, or even those which have gone to IBC today are not even a semblance of complexity that we are faced with over here, right? Either it is a steel plant or a textile plant or a petrochemical plant kind of a thing. So it is fairly simple, single product. There are identified strategic buyers who can potentially put in the bid. So here we need to deal with a variety of assets, and again held across geographies as well as multiple levels. And the key thing is that there is so many shareholders, third-party shareholders who are also partners with this entity, whose interests also we need to take care, or at least even if they have no interest, but we need to get their approval for whatever we wish to do. So these are also a set of efforts that we need to make. So the board, as they took charge on October 4th, took some very important strategic decisions to take care of how do we manage the resolution to be able to take care of the stakeholders. Second, at the same time, making sure there is a stability in the operations of this company. So you all know that we have appointed advisors, the Alvarez and Marshall, who have worked with multiple IBC processes to help us with the resolution process. We have Arput Capital and JM Financial to support us on the transaction process, and CAM, which is Cyril Amachan Mangaldas, and Shardur Amarjal Mangaldas to support us on the legal process. I think the legal, well, the transaction is a pretty glamorous and important function, but you'll find the fact that we have got almost about 150 odd intervention applications at the court, right? That's not all. We receive notices every day in multiple numbers, right? They also need to be responded to and made sure that this company doesn't get become vulnerable to potential attacks from anybody. So this is a very important aspect. So huge amount of effort is going on both internally and with the help of advisors to handle that. So one of the reasons why about 150 odd intervention applications have gone to the NCLAT is also because of the moratorium order we have got. It's extremely important to understand that why do we need this moratorium, or how does it help all the creditors, more importantly. You have seen that one IBC process takes, one of them have taken almost about 2 years, right? It's still going on. Right? And even the fastest one was Bhushan Steel. It was close to a year before it got resolved. Right? You can imagine we have got at least in the country substantive entity in about around 100 individually with third-party creditors sitting there. In an insolvency situation of this type, the kind of complexity that you can be faced with, if each of the entities are being pulled into an insolvency process or other litigations for recovery, the effort that we need to put in, right? I don't think even the entire organization that was IL&FS, which existed prior to were here, dealing with it would have been impossible, right? The only thing that can happen is that It will be a set of chaotic actions taken on the ground and destroying value for creditors across the levels, be it the viable SPVs or the intermediary holding companies or even the final super holding company called IL&FS. And mind you, I'm again repeating, we are sitting with creditors to whom we owe about 45,000 crores. It's not a small amount, right? It's about 4% of the total credit exposure of this country. The banks, roughly, 4 or even more, I think. Okay? That's the number that is sitting over there. So we need to handle it extremely carefully and making sure, and that is what this moratorium permits us to do. Attempt a systematic and careful resolution process to be able to protect the value for creditors across all levels, be it secured at the SPV level or the next level at the whole course, and again secured or unsecured as the case may be. And importantly, some of the most important investors in this entity, which are PFs and mutual funds, clearly. So I think we are not saying that any of the creditors will be compromised, right? But importantly, if an orderly resolution can happen, it will only add value to the creditors rather than destroy, right? That's something which we would like to communicate very strongly on this platform, right? There have been good number of articles we have read also. IL&FS is denying creditors payments and those kind of things. The early stage it did happen. But I think it's important to understand, if we have not got this calm period, perhaps you may not even have this board, you may not even have this management sitting and resolving, because what can you handle? You want to handle litigations, or you want to handle business, or you want to handle resolutions? Okay? That's the issue that would have been in front of us. We can achieve value for these underlying entities if we are able to maintain going concern. Even IL&FS has to be maintained as a going concern. With all the doubts about recoverability at this level, if this organization doesn't exist, recoverability will get that much more withered down, and then we are not going to be seeing outcomes. So the one thing that happened as soon as the board took over was also to set up an operating committee. We got introduced to them to fill in the vacuum in the management, in the leadership that happened as soon as the board got superseded, and many of the next level leadership also went away from the organization. It was important to make sure the next other employees feel confident, comfortable. Yes, there is a structure available. There is the people to whom we can raise up to. So that was important that's come in. And also it enables a coordinated action across all the verticals to ensure smooth resolution. So I've covered a bit on resolution process, what we are working on. I will not get into a lot of detail. But important is that a large part of the material assets are already part of the sale process. Okay, between IEDCL and which is the renewable energy vertical and the domestic road vertical, we are covering about 30,000 odd crores of overall debt. That's what you will cover. That's a very significant chunk. We are happy to say that we have received binding bids for the wind energy vertical. Okay. It's under the process of evaluation. We will announce as soon as the evaluation is complete and the outcomes are available. As far as the road vertical, it takes more time because of just this expanse of the number of assets that we, expanse of geography, the type of assets, we have operating assets, we have under construction assets also. And we also need to understand there are at least about 3 other simultaneous sale transactions which are going on for the road assets in the country. Which means that we need to attract the right valuation, we need to be able to give time to the bidders that they can do it in a very structured and systematic manner, approach and evaluation of these assets. In addition to that, also the credit environment for infrastructure is weak in the country. So their ability to arrange finance to be able to purchase these assets is also important consideration. So all of these are important to make sure we give the right time. The value, we can sell quickly and lose value, or we do it in a structured and sensible manner to maximize value. Ultimately, we are here for the creditors. Right? That's all that we are primarily. Right? The rest of the other processes are ongoing. The another important asset is the thermal power project sitting in ITPCL, which is in Kadalur, so which is also today has gone ahead. The good thing is that the interest levels are good, right? The continued interest, independent of the challenges, people remain interested. They've been accessing the data room, evaluating, and I do see that that some of the larger verticals will receive good interest and good bids for us. So effectively, most of the monetizable assets would have been completed. We expect, or at least our target will be to complete it by May, so that we at least know what is the potential value that we will be able to realize. The closure of these transactions can take their own time, right, in terms of the regulatory approvals or the counterparty approval that may be required. But I think we can assess what is the value that will be available. We hope that it will give good amount of comfort to the creditors sitting at all the levels as to what they can potentially expect to realize. This is not all. In addition to that, we have some other international assets we have already put through. There are a group of assets which are undergoing international insolvency process, but there are assets which are undergoing a sale process, especially in the Middle East. We are completing that. The mines owned by the power plant in Kadalur in Indonesia is also receiving good attention. So that's something which is also on the sale on the side. There are other good investments in the form of shareholding in the gas-based power plant in Tripura in joint venture with ONGC. There is the wholly owned subsidiary which does the transportation of water for the Paradip refinery with IOC. IL&FS technology is another important asset which could potentially create good value. So these are all will come up for sale in a period of time as we look forward to. There is a good joint venture with a Chinese partner in a road expressway in China, which also will come up for sale, which is already progressing. We should see an outcome in about 2 to 3 months kind of timeline. So we are in good shape as far as the extent of assets that have already been put through the sale process. We will have an ability to assess what is the value that we can expect to receive. Okay, as I said, the closure will take its own time because of the approvals that will be required, but we'll have a good picture over what the value that we can potentially get. Of course, all of this sale process is subject to a supervision from a transparency, fairness of the process by the Supreme Court judge, who is Mr. D.K. Jain, who is appointed by NCLAT. All right. In addition to that, they themselves, each of the transactions will go to NCLT for final approval before it is it's complete closed out. I think NCLT approval is good for us as the selling organization. It's good for the buyer because they get it cleansed of some of the defects that they might see in the assets. IFIN is undergoing is executing a very focused recovery process. As there is no lending that's happening, but definitely going through a very focused recovery process. The right hand side of the slide indicates to you the balance sheet. Okay, just focus on what I'm directing to you. Don't look at any other number for the moment, right? So that you can understand it better. Otherwise, you'll get distracted. The right hand side talks about the balance sheet. Okay? Where are our assets are, where are our investments in the form of loans or in pure investments, right? So there are external exposures of roughly about 10,000 crores, of which about 300 crores is in the form of investments arising from enforcement of security, okay, which is basically loans. So about 10,600 crores is what the loans that we have given to third parties. In addition to that, roughly about 7,000 odd crores is in the form of investments and loans given to the group entities. So there is an aggregate balance sheet of 18,000 crores. As you all know, the group entity recovery will be subject to the resolution process. What kind of value we are able to realize, that's when they will be able to get the money back. Okay. As far as the exposures to the third parties are concerned, the recovery process is on. But as you see at the bottom of the table, we are staring at a 90% gross NPA, which means that these are difficult credits. We have lent money but they have defaulted on their normal servicing. There's a portion of the credit which is servicing. We have been able to collect about 600 crores from those loan assets. We have also collected about 250 odd crores from the through the recovery process from each one of them, from many of the entities. But the trouble is that we are sitting with difficult and delinquent customers on the hand. We are not saying that this 90% will be something we need to forget. The recovery efforts are on. There are enough opportunities to make sure that we are able to recover. We will use legal process in the form of either IBC, use of the IBC tool as a tool, or a one-time settlement, even the criminal process for dishonor of checks. Multiple ways of making the client, the borrower to come to the table. And I must say that Kaushik is almost on a daily basis engaged in meeting a fair number of customers who want to settle. Okay, it's all about, are we settling at what percentage? Are we getting the full recovery? Are we getting the full interest? Are we able to recover penal interest? The good thing is that there have been cases where people have paid, including the penal interest, and tried to settle the case. There are others who are also offering marginal amounts. But I think we are not going to be reticent in making sure that the legal process helps us recover as much as we can. I think there is a fair target existing in our mind. We should be able to get there with all the process that we are. See, the only thing is that we can't predict the timeline over here. It's going to be long, to some extent time consuming and long drawn, but I'm sure that Kaushik efforts will definitely produce good results on the ground. So there is other set of, we talked about the cost overruns when we initially introduced the complexities that we have. So some of these are supported by claims on various government authorities, right? Primarily NHAI and some of the state governments which have given us concession. The good thing is that the government representatives are actively engaging with us to achieve an accelerated resolution of these claims, right? While I don't want to give you an assessment of how much we will receive or how soon it can happen, I think if you understand the way government authorities have worked on the claims or rather responded to claims, I will say, not work, I think I should use the word responded, because they also have an issue in terms of what can be accepted, what is not acceptable. I think we will be able to achieve this in an accelerated manner in an environment of comfort with each other, trust with each other. We are not trying to hoodwink anybody, but they also know that whatever comes is not going to the shareholders, but more to the creditors sitting on the other side. So there is a good discussion that's happening, and we are expecting a fairly reasonably faster and fair outcome out of this. So the other thing is that the first thing that this company started was a potential liquidity issues on the ground, right? So just to make sure that the assets are maintained in good order so that they remain valuable and none of the concessions or otherwise are getting terminated. And also we are in a position to make sure that the employees stay with us. We are able to manage the cash flows. Very highly focused cash flow forecasting methodology was introduced, and under this guidance of Alvarez and Marshall, who is our resolution consultant, this is an ongoing activity that is really doing that. Okay. We have also ensured that in order to get the right focus in managing the liquidity, identifying the entities between those which can support all obligations, they are given the right to be able to do that. So they are independently, rather we don't need an intervention in those cases. So it reduces the management time in actually overseeing those cash flows. Then the set of entities which are amber, you are familiar with it. I'm sure you have heard it. So those which can only service the senior creditors and operational payments, right? Then the last one is the red one, which may not be able to service the senior creditors. This is all reviewed in the context of a 12-month liquidity forecast, right? So to NCLAT, we have already submitted a statement of complete analysis of these entities from a 12-month forecast basis. We have covered at least about 99% of entities which have aggregate exposure of about 99% of the total consolidated debt of this entity. It's a very, very mammoth exercise, getting all the forecasts and from each one of them and getting there. So we hope that it will help us really be able to manage the cash flows and the on the ground operations in a manner which is more efficient and faster. And also make sure that we are able to explain to the creditors as to what we can do, what we cannot do. So there is also the real estate, cars, and many other non-core assets. The sale process is on. I think we should have sold about 35 odd luxury cars in the next few weeks and then got our money in that. It's not significant, but at least they demonstrate our intent that we are going to be focused on optimization and making sure that we are able to get money. The key point, other point that I would like to highlight is that how do we manage the operating cost? Right? That again puts a strain on the liquidity. So we have been able to rationalize and bring down the running cost of this organization on a consolidated basis by 300 crores on a run rate basis. So if I measure the reduction in the month of March and multiply it by 12, we'll get about 300 crores of savings. So this could keep going up as some of the rationalization effects actually play out and more rationalization of expenses and organization gets done on an ongoing basis, really. So another thing is that the impetus that we are able to give to people to focus on collections have actually resulted in one of the operating entities turning out from a hopeless situation to a fairly sustainable and viable model maybe in the next 3 to 5 months time frame. That's something which is actual turnaround on the ground of this entity, which is the construction company sitting in Hyderabad, which we have been able to achieve very clearly, right? So that's broadly what I wanted to explain to you. We'll now take the questions. So, just before we start, so a quick reminder. So we'll restrict the questions to IL&FS only, please, and let's keep it short. So we can start from the left and then take each one. So yeah, Tanya.
I think you should be clear. What the net worth which was talked about was as of 31st March 2018. This is before the adjustments which will happen in the current year, which is subject to audits and auditors, and therefore it is reasonable to assume that there is a significant erosion to net worth, and in many cases there could be significantly negative net worth as well. That is once we get the recoveries done. So finally, we all know that there is a significant risk of gaps coming out, and we've got to be ready for that.
Yes.
March 18 is reported in the audited financials before the new board stepped in. So the new board was. I'll have Kaushik answer it. But coming, some of us who come from the financial background, and many of you cover financials, one of the things which I'm sure would have struck many of you is to see a company which reported GNPA of 5% in March 2018. I've heard double-digit GNPAs, but 90% GNPA, I'm sure all of you would say, is quite unusual by any standard. So that's the challenges which we have faced, and I will with that ask my colleague Kaushik give you a little more perspective on IFIN.
Yeah, thanks. It's there in your handbook. So just to clarify, the proceedings we are doing are all the legal methods available to us under the laws for recovering our money. So it's not restricted to criminal. Even 138 today is under criminal. If you see the small table that we put down, it just shows what level of activity is going on to make the table above possible, which is the recovery of close to 931 crores that we have done since the new management has come in. So since we've come in, we have recovered 931 crores, and the activities down are the way we are doing the recoveries. That's the connection between the two. We are providing currently as per RBI regulations, and we are reporting to RBI on a quarterly basis. It really, at this moment, since we are not I would say not a business as usual, and we have reported a 90% GNPA, I think the provision cover is no more relevant, because my profit and loss is no more relevant at this stage. It's all about cash collections.
So,
I would information. Since you started now the asset monetization process, on the and you've got the budget case for the new person. So would give you an indication of whether audits is inclined to exercise their authority. And also a lot of the linked projects were earlier serviced by Electron, so this is one of the cases and partner way. And so I believe there are concerns of the services toward the cost of
Just to summarize what Mr. Shivraman said, that the bids have been received for the renewable and are being processed. To answer your questions on Enercon and other concerns that we shown, please understand that out of the green entities in this group, all the operating wind SPVs are actually green, which means they are servicing all their loans and making profits as we speak. So actually, if you see in the terms of outputs, not only the assets have been performing, they are making profit, and even by our own internal assessment after the new management is taken over, these are going concern which can fulfill all liabilities. So we hope to have good bids and in a fair and transparent manner, and conclude the transaction as the process continues.
and on Oryx.
Oryx has been our partner, and therefore would have some shareholders' rights under the shareholders' agreements. Exactly, and therefore they will have their shareholders' rights. And as an organization, we will abide by all the shareholders' contracts that we have with them. As I said, they have shareholders' rights, and we have received the bid. So we will follow the process, which will include following and going through the Oryx.
so can you just give that mic?
Mr. Shivaram, you said that in terms of recovery, you're still facing challenges there are challenges. So what kind of plan do you have in place in terms of recovery? And could you also share with us what kind of challenges you face?
Is it on IFIN, right? We talked about recoveries about IFIN, right?
Question is on asset monetization, or is it recovery?
Recovery.
And recovery is from IFIN. I'm just clarifying your question.
For the entire group, when you was
So I think maybe it's the asset monetization is
More about, I was talking about the one is of course IFIN, plus the group entities have also lent into the SPV. Right? So the recovery of those loans from those SPVs will depend on the way the valuation, the bids come in, and how do they look at the valuation. That's what I was saying. So we'll have to wait for the asset monetization process to complete before we assess how much we can be able to get that. So Absolutely right. If only we have known how the bids run and how bids, right? You've seen bids out across all levels, so it's not fair to make an assessment at this point of time. So we'll have to wait for the bids to come, because this interest of the value of the assets will depend on the value that it gives to the bidder, right? So we have to wait for it.
I'll request my colleague Rajan. He has some views on this monetization.
So I think just to clarify, it's May that what you read there up to May was only the transactions which have already been launched. Otherwise, there are a number of transactions which are yet to be launched. So it is not, May is not a terminal date. It will go well beyond May. That is it. So and therefore, in any case, in terms of, you would understand, it is very difficult to anticipate how many bids would be received in which transaction. So it is not possible to make an estimation. And this process is going to be a somewhat long-drawn process. But what we only wanted to emphasize is the process has begun in right earnest, and in one transaction bids have been received. So that is all that we wanted to share at this point of time.
I think fair amount of work is going on. As I said, that there is significant erosion on net worth. There are many parts of the group which would have negative net worth, and therefore to give you an answer that against the 100,000 crores of total effective debt, what will be the actual percentage recovery, still under process. All that I can say is that significant work is going on different parts, and transparent, open, fair process of resolution is fully underway. So that is something which I think I can clearly say. But where the ball drops and where do we finally get, it's still early days. I mean, most of us would have some estimates, but it's always very dangerous to give an estimate and then be either higher or lower, because then the next meeting you will ask, why were you lower, why were you higher? Therefore, we would much rather come closer to the actuals and share with you along the way.
As you would have, from the presentation, you would have been able to make out that most of the assets have been studied and they have been classified. And the classification has been made on the basis of green, amber, red. These red are obviously able to service their both their senior debt as well as their green are able to service both their senior debt as well as their accrued debt, both, and for at least for a period of 12 months or beyond. So those are coming up for sale in the first phase. Now it is entirely possible that many of the assets which are say red we may not have buyers, they may not have takers. So you would have to have an alternative resolution mechanism to deal with such assets. So therefore, at this stage, yeah, a lot of homework has been done, and which is the very fact. That I will be able to.
I think very often, as you know, beauty lies in the eyes of the beholder. For what we think we may not recover value, somebody may find value, and where we think there is value, somebody may not pay value. So at this point of time, we also see, finally, if you are in a competitive bidding process, you also have, it is important to not give away your cards before they are played out. Na? So you also want to make sure that from the point of view of the stakeholders, we do what's right by them in a transparent manner, but to ensure that we are getting fair value for them. And therefore, I would be able to answer your question once I know where the bidders are coming. And no, we've also got a list of entities which, within the red category, which may actually we may be in a position to actually think about even some of them down the liquidation path. So there is a list of such entities. I think, in my view, we will not push anything to liquidation where we think there is any value possible, but where we think the value is either insignificant or completely irrecoverable, where the cost of recovery is more than what we think is the ability to recover. We have a list on that. There is work going on, and you got to keep everything for us to share with you at the right time as well, no?
Sir, we'll take a question from my. Can we just come back to you, please? Can we just come back to you, please?
The board then says that you cannot classify it as NPA. And at the same time, there is a moratorium for proceedings. And the public sector banks have a large exposure, 9,000 crores. So, will they be for a sudden surprise once the moratorium is lifted?
See, I think Shivraman highlighted it very well. First of all, in order for us to have been able to reach to this point, the period of calm was extremely important. And we genuinely believe that the process which we are going down is an uncharted process in Indian financial history. The concept of group liquidation of a complex firm like this is the first of its kind in this country. And therefore, as we go forward, what we also need to ensure is that there is a fair treatment to different classes of creditors. And there is a very wide variety of creditors with conflicting interests at different levels. So one of the interesting aspects of this whole process is going to be how do we from our side present a fair and transparent basis, number one, of resolution, number two, of distribution, and how do courts intervene in that to what is fair distribution in public interest. I think finally we are in an uncharted process. The question which we have to ask is, what if? Let me play, I think Shivraman mentioned that. Assuming we had 200 companies, each of them going individually into an IBC process and control. NBFCs or the financial companies are not part of it. There is significant amount of cross-group lending. A disentangling of group as complex as IL&FS without a process of the kind which we are seeing, we don't know where it leads us. And that's the question you have to ask. Just think about, it's like the crisscross situation of money, layering, and complex group between finance, infrastructure, and whole variety of areas. Therefore, both the legal process, the financial process is unique in the Indian context where, and even globally, group resolution or group process is not as simple as a straightforward single company processes. And this is the challenge which is faced. Having said that, I mean, when I look at the last 6 months, I think we've traversed a fair distance in terms of understanding the issues, putting out a resolution process, putting many companies into the resolution process, and working closely with the legal process simultaneously for us to be able to do that. Now, the question is, where each individual company in an IBC process, as Shivraman mentioned, has taken time up to 1.5 or 2 years. How does it work if there are a few hundred companies? And there is a pretty significant backlog in the regular IBC process as well, which we are aware of. So this is a single consolidated group where there are green, amber, and red. So the whole ability to bring down and distinguish between different categories of companies is a first step towards untangling a knot. Well, let me also step back and tell you that in addition to banks, there's a fair amount of money on debentures, commercial paper, both debentures, both secured and unsecured, and a whole host of lenders and investors well beyond banks. And while I'm not able to give the exact number, I think banks are what, 50% or 60% of the total debt? Around 50%. Therefore, when we are looking at a solution, you've got to look at a solution which is for the broad set of creditors in addition to bankers. And I'm not saying that there is a particular direction. We have followed, in terms of our resolution recommendation to the courts, a process which is IBC-like. However, it is finally for the courts to decide which way both resolution and distribution will happen. And it is here that I also want to mention that the courts, realizing the complexity of the situation, have actually put a retired Chief Justice of the Supreme Court, Justice D.K. Jain, to oversee the process additionally. Because this is a large amount of public money at stake. I mean, if you look at any resolution process so far of a single group of 100,000 crores, I think this is a unique kind.
As I mentioned, I think we have also made some press releases from time on the level of interest that we have received for various assets. Without getting into the details, I can say that as the expressions of interest that have come in have been significant and from quite well-capitalized and strategic players as well as the financial investors.
Yeah, but for the renewable case, for which the final case that it was closed sometime back, do we need to approach to tell us what the process?
So at the time when we received the expression of interest, there was the press release. We did make the announcement as common.
Not for the renewable assets. And I'm asking specifically about those because the existing shareholder already has a
No, it's about, see, we are talking about the binding bid, evaluation, completing our process with the existing shareholder and announcing it. Right? We have not reached the stage of making an announcement as of now. But when we received the expression of interest, we did make an announcement.
So could you say what is the interest for how many bidders and
I think if you look at page 10 of our presentation, we have given, I think that is the number of entities of our entities, not the number of bidders.
The 30 EOAs have been received. There are quite a number of them who are continue to be active on the data room. 30 for roads.
That's what I'm saying. So, and that for the road, you give that number for renewable energy. And now we got final bid, so we come back to yes. So you share with you the right time. So,
Just a second, we'll just come in.
But on the other hand, there's a model for there is this slight dichotomy. You are pushing ahead for your recovery and you get because on the other hand, you owe money, you do not have that.
And I think you must understand, and when we put in the slide, today IFIN is sitting on a cash deposit of 1,000 crores. Now, this team you see here has to build up the reserves to make sure we optimize recovery for creditors, right? And that's why the moratorium that Shivram mentioned. Now, it is our duty to make sure that we utilize legal means to recover money due to us contractually. Now, whether that be IFIN, whether that be ITNL, whether that be any company, contractual money due to this group is something we owe to our creditors. And that's exactly what IFIN is doing. So we are building up the cash reserves. And today you see the number over here. And we'll continue this process.
Can I just stop here and in in a way, both your questions are connected. If it was hunky-dory, the government of India did not need to step in and oppose. Therefore, in many ways, we have been appointed by the government and the courts precisely for the challenge. Okay? And therefore, the position of the new board is very different from the problems the institution has come to. The position of the new board is to really see how it recovers money for the interests of the stakeholders, including the creditors. Okay? So we have not necessarily stepped into the shoes of what was wrong. We have stepped into the shoes to correct and protect stakeholders. And that is the difference I wanted to highlight to you. And the same point applies in your context. We are here to protect stakeholders.
I'm asking if the
At this point of time, we are going by the NCLAT order. What you have to keep in mind is the conflict between stakeholders. Therefore, what the process has to ensure that the distribution of the proceeds is fair. There is secured creditors. There is secured creditors at different layers. There is unsecured creditors at different layers. And there are different categories of investors. There are banks. There are financial institutions. There are pension funds, domestic pension funds. There is army group, employee welfare, a whole host of people whose money is at stake. And while we have recommended an IBC-like resolution process, it is finally for the courts to decide which is the fair way of this distribution in the larger public interest.
So we'll just take a question from here. Just a second. We'll just take a question from here.
That depends on the courts. I mean, this animal of this new board is a function of a court process. Okay, it is not a function of a shareholder process.
That's right, sir, but you would have an assessment as to how long.
So that really depends on what the courts believe is appropriate, and therefore, I think the answer for that is not with us, but is with the courts. I think again, to be fair, I think Shivraman has put out a wonderful chart where he has shown that amount of assets which have been put up for resolution, which is slide number, I think it's slide number 10. Now look below. This is the fund-based debt of assets launched. This is not about the amount of recovery. And if you add all the fund-based debt, it's about 40,000 crores. Total fund-based debt is 94,000. And then below that, and this is basically given our current estimate for this 40,000 crores, we put up planned binding bid, which is right put up above that. So that gives you a roadmap of what we see in fund-based debt, which we believe should be estimated in terms of closure. I mean, in terms of final bids, and thereafter the regulatory process. And then look below. Further processes launched, all international. Further processes under discussion. Whole host of companies which have been put there. All these balanced ones add up to that 40,000 crores number.
Rohan, just a second. You just ask the question.
One question on the recovery process, sir, also on the asset monetization side. Now, when you read the grant report, when you read the ECIL has been filed, it speaks about the fact that a lot of money has been given to people who are not working lenders. A lot of the money has been siphoned off. Have you, in the recovery process, really identified the amount of money which has gone out with imputation to the lenders? Is that something you have also realized?
I'm going to ask Mr. Bijay Kumar, the Deputy Managing Director, who is closely focused on the whole process of including the various investigations which are going on.
When money goes out of the system, money trail is the clue actually. And the money trail clue is being carried out by two agencies here. We are closely coordinating and giving all the information. You may be aware that audited accounts are available for 2018 March. And that too, impairment, etc. have to be given effect. New management is doing that, getting it audited. You may be aware that 3 of the entities' accounts are reopened also and getting audited. So all these things are being carried out just to assess how much impairment has taken place, how much money has been invested, how much gold plating has been done, and how money has moved from IL&FS group entities to individual funds, individual pockets, or it has been wasted. So all these things are being identified by 2 agencies, SFIO and ED. And we are hopeful that they are coming out with a meaningful outcome as such. Yes, it is a secret which I will like to share with you. They are doing very meticulous work. First secret. Secondly, we are cooperating with them. And last secret is that I will not disclose the name who are the persons in the against. Well, then that defeats the purpose of investigation itself. Definitely we are eyeing on those persons, eyeing on those systems, modus operandi which has led to this situation, and actually must have taken place. When this much empty evidence, there is something wrong. Maybe financial fraud, this may be accounting fraud, maybe layering over layering, like you are seeing the organization has number of layers. Similarly, the modus operandi must be revealing too many things. But definitely we will come out with that.
So can we take last 2 questions now, please? Last few questions now, please, we'll take. So somebody who's not asked, please. Yeah.
My question is on moratorium period. I take the question forward. You mentioned that the court will appropriate time for the calm period to be there. But as a banker, what do you think? How much should be the moratorium period?
I wish I had more experience as a banker of handling anything of this complexity. Then I would be able to give you a much more accurate answer.
So when can the banks expect to recover some money?
So, and one more thing, one more last.
What is the total contractual money owed to the group, including IFIN, IITN, all the companies?
See, the amount that has gone out to third parties are what has been given by IFIN as a loan. The rest of them are actually investments in projects, either operating projects or some of the infrastructure projects. Okay, so these are not, you can't call them as receivable. This has got to be by way of operating the business, generating cash flows and collecting.
So my asking is that, so when you said that IPL or IPL or the company will try its find the legal code or whatever to recover the money, I want to understand what is the total amount of money that you...
I'm again reiterating for you to understand, IFIN is lent money to third parties.
Yeah.
Okay, so that is what you can call it as a receivable from third parties, which you have dealt with it in detail.
So,
You referred 7,000 crores and from IPL to two companies. 7,000 outside.
so one.
On the group level, transactions how much would they go? Please have that.
Could you just repeat that question? So IFIN has lent 7,000. That's right.
Obviously, other group companies have also extended funds.
No, so not to third. So IL&FS, IFIN, and ITNL are the main holdcos for the respect. It is the job of these companies to support their verticals under. So if you take out the external book of IFIN, rest of it is group. They are meant to support the group, right?
So
because they are the holding verticals of the group.
So last question from Brajesh. Let Brajesh move on.
दो सवाल हो गए। एक सवाल ये है कि जैसे कई लोग ने काम किया है, लेकिन क्या बोर्ड में किसी 9% में बैठ के की बात हुई है बोले कि काफी ज़्यादा है। जो नया बोर्ड आया क्या उसने ये सोचा क्या कि पुराने बोर्ड के अगेंस्ट एक्शन नहीं किया जाए? और दूसरा सवाल ये कि एम्प्लॉइज की सैलरी का बैकलॉग है कितना है?
ठीक है, नया बोर्ड ने प्रायोरिटी बड़े ढंग से सेट किया है। पहला तो ये किया कि लुकिंग फॉरवर्ड जिसको कहते हैं, इस ऑर्डर में लाके रिजोल्यूशन करना, वो काम आप देख रहे हैं कि सबसे अच्छे से बारीकी से अभ्यास करनी चाहिए। दूसरा पार्ट है जिसमें आप चाहते हैं कि नए बोर्ड ने ये देखा है क्या कि पुराने बोर्ड में या किसी भी फंक्शनरी ने, जिसको की मैनेजरियल पर्सन कहते हैं, उन्होंने क्या किया है। तो डेफिनेटली उसी को आइडेंटिफाई करने के लिए हमने अकाउंट को जिसको कहते हैं कि दुरुस्त रखना, उसको फिर से रिव्यू करना, उसके लिए एक्सपर्ट्स लगाना, उसमें ICAI की मदद ली है, मतलब आपने CAG के आइडेंटिफाइड ऑडिटर से ऑडिट करा करी और एक फॉरेंसिक ऑडिट भी करा रहे हैं, आपको पता होगा। और ये सारे इनपुट एक तो है कि प्रशासकीय कारण के लिए एडमिनिस्ट्रेटिव एक्शन के लिए हमारे पास रखने का, इसके लिए शुरुआत की गई है, आप देखे होंगे। और दूसरा पार्ट है जिसमें क्रिमिनल एक्शन के लिए, तो क्रिमिनल एक्शन इसके लिए हम SFI और ED की मदद लेंगे, क्योंकि वो एक लॉन्ग ड्रॉन प्रोसेस होता है, उसमें एक बारीकी से अगर एविडेंस तैयार नहीं किया गया और लाइन ऑफ इन्वेस्टिगेशन करेक्ट नहीं हुआ तो शुरू में तो बहुत अच्छा लगेगा कि बहुत से लोग ऐसे हो गए, अरेस्ट हो गए, लास्ट में निकलता कुछ नहीं है। तो उसके लिए हम उनको पूरी इनपुट दे रहे हैं, तो वो भी काफ़ी मेटिकुलसली वो काम को कर रहे हैं। आप देखेंगे कि एडमिनिस्ट्रेटिव एक्शन हमारे लेवल पर और क्रिमिनल एक्शन इन्वेस्टिगेटिव एजेंसी के लेवल पर दोनों साथ साथ चल रहे हैं और इसके रिजल्ट भी अब आने शुरू हुए हैं। और आप देखेंगे कि काफ़ी लोगों के पास जहाँ पैसा फेल हुआ हो, चाहे देश के अंतर्गत या देश के बाहर, वो भी लोकेट किया जाएगा।
So I think we'll just end it now. No, we'll just end it now. Rohan, we'll end it now. So you can just take it this way. Guys, Brajesh, we'll end it now. We'll end it now. Thank you guys for coming. Brajesh, we'll just end it now here. Thank you. Thank you so much. Thanks everybody for coming.